One of the biggest problems for traders is identifying a real breakout from a fake one. In this video, I'm going to show you a simple but practical strategy that combines the Ichimoku Cloud and RSI to find stronger breakout opportunities. By the end of this video, you'll know exactly how to identify valid breakouts, where to enter a trade, and when to avoid bad signals. Stay until the end because I have prepared a quick quiz to test your understanding of this strategy. So let's get started. Before we begin, let's reveal the answer to the quiz from my previous video. The correct answer was B. Wait for bullish candlestick confirmation. The RSI reaching 61.8% tells us the setup is interesting, but this is not enough to enter the trade. We still need price to confirm the bullish reversal. If you got it right, well done. Now let's jump into today's lesson. Understanding the Ichimoku Cloud. The first indicator we are going to use is the Ichimoku Cloud. Open your chart, go to the Indicators section, search for Ichimoku Cloud, and add it to your chart. At first glance, Ichimoku may look complicated because it has several different parts. However, in this strategy, we don't need to use every part of Ichimoku. We only focus on one important part, the cloud. Now let's make the chart cleaner. Open the indicator settings. In the Input tab, keep the default settings. Then go to the Style tab and hide all parts except leading span A, leading span B, and the cloud fill. Now we have a cleaner chart and we can clearly see the cloud area. The Ichimoku Cloud helps us understand the market environment and identify important breakout areas. When the price is above the cloud, it shows that buyers are becoming stronger and the market has a bullish environment. When the price is below the cloud, it shows that sellers are becoming stronger and the market has a bearish environment. Think of the cloud as a filter. It does not give us the exact entry point. Instead, it helps us decide which direction we should focus on. For this strategy, we don't use the cloud color as a signal. We only focus on whether the price breaks above or below the cloud. When the price closes above the cloud, we consider it a potential bullish breakout. When the price closes below the cloud, we consider it a potential bearish breakout. But remember, a cloud breakout alone is not enough. Many traders enter immediately after a breakout and get trapped when the market reverses. We still need to know if this breakout has real momentum behind it, and this is where our second tool becomes important, the RSI indicator, which helps us confirm the strength of the breakout. Adding RSI. Now let's add the RSI indicator to our chart. Most traders use RSI to identify overbought and oversold conditions. They usually look for RSI above 70 or below 30. But in this strategy, we use RSI in a different way. Instead of focusing on overbought and oversold levels, we focus on the 50 level. Why is the 50 level important? Because it helps us understand the direction of the momentum. When RSI is above 50, it shows that bullish momentum is stronger. When RSI is below 50, it shows that bearish momentum is stronger. So RSI helps us answer an important question. Does this breakout have enough momentum behind it? For a buy trade, we don't want only the price to move above the Ichimoku Cloud, we also want RSI to cross above 50. This tells us that buyers are not only pushing the price higher, but they also have a stronger momentum. For a sell trade, we'll look for the opposite condition. We want the price to move below the cloud and RSI to cross below 50. This combination gives us a strong confirmation and helps us avoid some weak breakout signals. Now we understand the role of both indicators. The Ichimoku Cloud tells us which direction to focus on. The RSI tells us whether the breakout has enough momentum to support the move. But before we look at the real chart examples, let's summarize the complete rules of this strategy. The complete trading rules. Let's quickly review the rules of the strategy. For a buy trade, first price breaks and closes above the Ichimoku Cloud. Second, RSI crosses above 50, confirming bullish momentum. Third, we wait for a bullish confirmation candle before entering the trade. For a sell trade, we'll look for the opposite conditions. Price breaks and closes below the cloud. RSI moves below 50 and we get bearish candle confirmation. That's the complete idea behind this strategy. The cloud helps us identify the direction, the RSI confirms momentum, and the candle confirmation helps us avoid weak breakouts. Now let's see how this works on a real chart. Buy setup, real chart example. Here we have a chart where the price was moving below the Ichimoku Cloud, but then the price starts moving upward and breaks above the cloud. This is our first confirmation. However, we don't enter immediately. Why? Because a false breakout can happen at any time. So we need another confirmation. Now we'll look at the RSI. Around the same time, RSI moves from below the 50 level and crosses above 50. This tells us that momentum is changing. Buyers are starting to take control of the market. The final step is waiting for candle confirmation. Here we can see a bullish candle closing above the cloud. This is a strong bullish candle because buyers pushed the price higher and it closed strongly near the top of the candle. This candle shows that buyers are supporting the breakout. Now we have our complete setup. The entry point is after the confirmation candle closes. For risk management, we place our stop loss below the recent swing low, and for the take profit, we can use a 1-to-2 risk to reward ratio or the next important resistance area. Remember, even a good strategy will have losing trades. The goal is not to win every trade. The goal is to manage risk and allow profitable trades to become larger than losing trades. Before moving to the sell example, if you find these real examples useful and want more simple RSI strategies, a quick like helps support the channel and lets me create more practical trading videos. Okay, now let's look at the opposite situation and see how this strategy works for the sell trades. Sell setup, real chart example. Now let's look at a sell example. Here the price was moving above the Ichimoku Cloud. Then the price starts moving downward and breaks and closes below the cloud. This is our first confirmation, but we don't enter immediately. Now we check the RSI. Around the same time, RSI crosses below the 50 level. This confirms that bearish momentum is increasing. Next, we wait for bearish candle confirmation. Here we can see a strong bearish candle closing below the cloud. This is a strong bearish candle because sellers pushed the price lower and it closed strongly near the bottom of the candle. Now all conditions are met. We can enter the sell trade after the confirmation candle closes. For risk management, we place our stop loss above the recent swing high, and for take profit, we can use a 1-to-2 risk to reward ratio or the next important support area. And that completes our sell setup. Now let's look at a few situations where we should avoid taking a trade. When not to trade. The first situation where we should avoid trading is when the price is inside the Ichimoku Cloud. When price moves inside the cloud, the market is usually unclear and there is no strong direction. The second situation is when RSI stays around the 50 level. If RSI moves up and down around 50 without a clear direction, momentum is weak and there is no clear control from buyers or sellers. The third situation is when the price only briefly breaks the cloud but quickly moves back inside it. It can be a sign of a false breakout. If the price cannot stay outside the cloud, we should not rush into the trade. Wait for a clear candle close outside the cloud and RSI confirms before considering an entry. So always remember, a strategy is not only about knowing when to enter, it's also about knowing when to stay away. Quick quiz. Before you leave, let's test your understanding with a quick quiz. Imagine the price is above the Ichimoku Cloud. The market looks bullish, but the RSI is still below 50. Should we enter a buy trade? A. No, we should wait for RSI confirmation above 50. B. Yes, because the price is already above the cloud. C. No, we should wait for another cloud breakout. Think about your answer and write it in the comments. I will reveal the correct answer in the first 30 seconds of my next video. If you enjoyed this strategy and want to learn more practical RSI techniques, check out the other videos on the channel. And if you like to support the channel, you can become a member. Your support helps me keep creating more RSI strategies, tutorials, and trading lessons. Thanks for watching, and I see you in the next video.